The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Folks, and if there was ever a time that we could see into the future, this would be the best time to do it because we have these Greek elections coming in on Sunday, the 17th. I don't really think it's going to mean a whole lot, but something exciting has happened in Switzerland. One of the larger trading Forex firms there, Oanda Trading, they've been in business for, about 17, 18 years. Pretty good-sized firm. I mean, well, not that big, but they're a good Forex company. They are not going to take any orders from 11 p.m. GMT to 19 p.m. GMT on Sunday, just to get away from the, volatility. I haven't heard of that from any other of the, the Forex firms that I know. But this is where I can't imagine why they do that. They must be small enough that they're not worried about that they are worried about other sides of the trade. But the thing that you'll want to watch if you trade Forex Sunday night, and I will certainly be watching it for sure, because if you start seeing bid and ask spreads that really go wild. I mean, like the bid-ask spread on the euro is usually 1 or 2 pips, the pound about 2 or 3 pips. The other is pretty much the yen, 1 or 2 pips. If these start moving out 20, 30 pips, then you know that the whole world is getting ready to come unglued, because that just means big money is scared, and when big money gets scared, you know what happens. So you watch the pip spreads on Sunday night, and if you start seeing them, way out of line, and way out of line is, 15, 20 pips in the euro, 20, 30 pips in the pound, and in the yen, stuff like that. I mean, and crazy swings. In other words, 50 pips up, 40 pips down, that type of thing. That means that the money is getting scared, and then we'll be able to look at it. The first chart that I put into Tiger TV today, because we're talking about commodities, is the U.S. dollar, because that's what's really controlling, how money is moving and stuff, and we've completed that. The big butterfly pattern up there at the 83.70 level, that big ABCD that we've been talking about for quite a while. We're down. We're going down into our 8th day now, down in the dollar. That means the euro has been rallying for 8 days, and we have a price objective at around 80.70. That's about 120 pips from where we're trading now in U.S. dollar index. And if we equated that to if we equate that to the euro, that would get the euro up into the area of the 120, right near 128. If that's where we'll be looking to rally, if we come into into this Sunday night, whatever the election is or whatever it happens. Remember, last Sunday night, they had a huge gap up in the stock futures because of the 125 billion loan to Spain, and you saw that it didn't make any difference. So these things probably are not going to make any difference at all, because we're in a debt cycle, and that's the bottom line. That's the way it looks to me. The bonds are under a lot of pressure today, along with because we're having a rally in stocks. No fear out there anywhere, so this is what we're taking a look at. Now, we will be looking at, later in the show, we're going to be looking at the natural gas and walk through that particular, pattern that we were looking at as far as the commodity. You know what? We might just do that just right now, since I have the control of the monitor and everything. I think that's what I'll do right now, is I will just pull up the natural gas here, and we will see if we can, see what we're doing with the contract. Oh my goodness! I didn't realize it had rallied that much. Thanks for bringing this up to me. I wanted to we were talking about buying this down around the 61% retracement level. This seems rather strange that this thing would move 20 cents. I don't understand that. I have not been near the machine today because I've been doing other things, but this seems off. This is the biggest rally we've had in this thing in a year. There must have been something really, they must have run out of natural gas in a matter of a few days. This doesn't make any sense to me, but I'm going to have to check it out. What we were watching was that 222 level, and what we were doing is we went down to a 30-minute chart to take a look at it, and it held that level relatively well, and my goodness, folks, I had no idea. This is a monster move. Thank you for alerting me to this, because it's happened in the last hour, the last 2 hours, and it's really, really quite amazing. In the Tiger TV, I posted both the daily and the 30-minute, and the 30-minute basically was how we were trying to, look at it on a smaller time frame so that we wouldn't have to risk very much at that 220 level. And we went a little bit below 220. We got down to around 218, and now we're trading at 240. We've actually made, believe it or not, folks, in a matter of 6 hours, we have made the 1.618 expansion of the high of last week. In other words, the high of last week was 2.30 cubic feet, and we went down to 218, and now we're up to 240. We hit the 242 level, which is the 1.618 expansion of that. That's equivalent to a crop failure in corn. So it's really amazing that this has happened. Now, there might have been a report that came out to do this, but even if the report came out, this market had already started to, to turn up just by looking at the, the butterfly pattern that we had on the 30-minute, and the fact that it was, very, very close to the 61%, on the daily. But this is what we were trying to show this week, was the fact that we had, this pattern coming down. We didn't know if it was going to hold, so what we suggested to do was to move down, into the smaller time frame in order to control your risk. This is one of the things that I'm going to be really focusing on during the webinar that we're going to have on July 11th, is trade setup and how to enter without risking an arm and a leg, and try to get the execution down to the best possible price that you can get to keep your risk, relatively small. That's one of the things we want to do. That's, it's all part of, pattern recognition and risk control and all of the things that we're looking at. So this natural gas, it looks like, since we've gone so quickly to the upside, we have actually, this is really amazing, because what we've done is we've made the 786 off of the June high in the matter of, that was the high today so far, was the 786 off of the June high. And this is really amazing, the fact that it did it in a matter of a few hours. This tells you that, you don't want to be a short seller in this. You'd be taking some profits if you bought some down there, because, my goodness, you haven't had a move like this in a very, very long time. And so this is hats off to the gentleman Nick in Nashua that alerted us to the fact that it had such a big move today. I was going to cover it the second or third thing in the program today, and I didn't realize in the last couple of hours that that's what really happened. Wow, that is really an incredible move. Now I'm going to bring up a chart on the largest crop. I mean, natural gas is a pretty big product, but the largest crop that we have in the United States, as most of you know, growing crop is our corn crop, and we have been watching this go down to the 509 level. I don't know how many times now. I think this is the fifth or sixth time that we've been down there at the 509 per bushel level. We're now trading at around 517 per bushel, and it's held relatively well. Now we are in the first. Actually, we're in the second week in June now, and so we're getting close. We're getting close to hot weather. And in my career of 50-some years, I don't think I've ever seen a year where we haven't had at least one crop scare in corn, wheat, or beans. I mean, there's always something happening, whether it's too hot, too cold, not enough rain, too much rain. There's always something happening. So this is your chance to be a farmer here, folks. At this level, you don't have to risk much below $5 a bushel. So for $1,000, you can control about 300 bushels of corn. Actually, it's 5,000 bushels of corn, but on an acre, if you were a farmer, you'd have about 300 acres, I believe, to get that 5,000 bushels. So this is your chance to be a farmer without having to buy any land or have a tractor, have any employees, buy any fertilizer or anything like that. But you do have to risk about $1,000 if you're going to take a look at this particular trade. Now the other markets that we have, and we're going to cover each of those as we go through, soybeans, and we're going to cover the wheat also. But for the purpose of, most of the people in the den and in Tiger TV is that you can use the ETF for corn, which is CORN, and that's an easy one to use. It gives you a pretty good chance of, pretending to be a farmer. Well, not pretending to be a farmer. You actually are a farmer, because when you got real money up, you're no longer pretending, and that's the key to this. Is that you want to try to make $1 or $2 off of it. But it looks like we've had a really strong consolidation since almost a year now. Since late August of last year, the corn market has been backing off. And we hit that 61% retracement at 497, back in May, and now we've tested it, 1, 2, 3, 4, 5, 6, 7, 8 times at the 786 level. So that's the level that we would be watching for, the support to come in, and that is key support in the corn. There is no, that is non-negotiable. That has to hold that level, or it's going to be, in real serious problem. Now, before we move on to the rest of the crop of soybeans and wheat and corn, I want to move back over to the euro, and just to put up a 30-minute chart on the euro into Tiger TV, so that you can see that where we are now is we are at a major 786 retracement coming in here at this 126.20 level, and that tells us that this is why the dollar is holding, right where it is. So once the euro, if it can get above this 126.50 level, that's telling you that the dollar index will be heading down what we believe will be a good buying opportunity at the 80.80 level or 80.70 level in the dollar index. But right now, the euro is bouncing up against that that's resistance at the 126.25 level at that particular point. So we need to keep an eye on that. We are going to, when we've got to pay a few bills here, then we'll be back. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back. This is Larry Pesavento for TFNN doing the Commodities Hour. If you have any questions, you can call in at 877-927-6648, and we'll talk a little bit about commodities if you like, or stocks, whatever your heart fancies today, because this is Flag Day, and if we can wave our flag, we can talk about everything we want. By the way, one of the greatest baseball plays ever was in Dodger Stadium back in 1984, when Rick Mundy, who was playing right field for the Los Angeles Dodgers, went in and stopped 2 people from burning the American flag in center field. Mundy came across, not being armed with anything other than his baseball glove, grabbed the flag, knocked both of the people over, and ran away. And, of course, the policeman came as the fire started, but the flag was saved. And it took about, I happened to be at that game, and it took about 1 hour to calm the people down because they were giving him so many standing ovations. It was really probably one of the best plays ever in Dodger Stadium. However, without doubt, the greatest play in Dodger Stadium that I ever saw was in October of 1988. In the bottom of the 9th inning is when Kirk Gibson came out and hit the home run. I don't hear Ellen. I hope I'm on. I have my sound working. It looks like I'm working. Can anybody hear me? Okay. Well, I don't see. So if and at least it looks like it's got a chance to rally from here. I'm watching gold and silver at the same time, and it's really difficult if you're long silver. A big move in gold, So this is something that we want to watch for the future, and then we will see what's going on. Evidently, we seem to be having a technical problem, and I don't know where it's coming from because I haven't done anything differently at all. And I wish I'm going to just keep talking because I don't know what else to do. To look at it now. I'm going to talk about the crude oil a little bit here because we've had requests for it, and then later on I will get back and I will do the wheat. But to start out with, I'm going to do crude oil and show you the fact. In fact, I've done this every day that I do the show is because it's such an incredibly important spot. As far as the support, because it's right at that 786 level, and we've hit it. Oh my gosh, I think we've hit it 5 or 6 times, in the last few days. But the problem is, folks, is that we have not really gone, up very much. We're still within $1. That means we could, if we had a $4 per break in the market earlier this week when the market sold off. And that means that, that could easily happen again. Now, a lot of this stuff is probably going to be manifested on these elections that they're probably going to
personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated negotiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even...
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, this is Larry Pesavento for TFNN on the Futures Hour, and we were talking about the corn and the fact that new crop corn, which is December corn, has held up relatively well at this 509 level. It's now trading around 517, and it should hold above $5 per bushel. Like I mentioned before, in all the years I've been doing this, we hardly ever go through a crop without at least one scare. In other words, too much rain, too little rain, not enough heat, too much heat, and so this is something we'll probably be looking at. I've also placed a chart of wheat into the Tiger TV so that you can see the comparison between the corn and wheat. They both had pretty good corrections. They both stopped down. The wheat stopped at the 786 retracement. The corn stopped at the 61% retracement. So both of those are poised to, it looks like they could be in for a little bit of a rally. Okay, I think we have a caller from Tampa. Ellen, are you there?
I am, Larry.
Finally.
Thank
What
you.
can I help you with?
Well, you've already talked about oil, but unfortunately I got disconnected, and I love to trade oil, and I've been watching it and watching the dollar and the correlation with the bonds, and now natural gas. Does that have a play in with oil?
I don't think so, because it gets a different. It comes from a different source, as near as I can tell. But here again, I am not a fundamentalist, but I know that crude oil is basically heating oil and gasoline. That's primarily what they crack that into. But I believe natural gas comes from someplace else. I don't know what moved natural gas that much, but at least it was moving in the direction that we thought it was going to go. I would like to mention, you mentioned that you're watching bonds and the dollar and the other things that make crude oil move. But frankly, if you'll just watch crude oil by itself and not even worry about what those other things are doing, I think you'll do a lot better. It trades so beautifully, off of the numbers that we look at. If you go down to a half-hour chart or even a 15-minute chart, you'll see these 618 and 786 retracements, and you'll see the expansions of 1.27 and 1.618. And I think it would really, really give you a really good shot to, do really a lot better. See, I try to be really simple and not try to look at bonds and stocks and, crude oil and gold and things like that, because if you just focus on what's being traded, then it takes a lot of decision-making out of your head.
Well, yes, the only thing is, though, when some of the geopolitical things come into play, it's complicated. For example,
when that happens, and this is what's going to happen Sunday. You're going to see some geopolitical stuff coming out of Greece or Spain or wherever it comes out of. There's going to be some fireworks, coming out. When a Swiss Forex firm decides not to take orders, something big is probably going to happen. And if a few other firms do that, it's even going to get even greater volatility.
Well, yeah, I subscribed to your letter, and when you started talking about bank runs, I got to tell you, it was terrifying.
Well, we haven't had any here since in the 80s we did. From the savings alone, we had a few of those, but because of FDIC, they took care of that. But the bank runs that I'm worried about is a sovereign bank run. And, you're starting to see a little bit of that in Greece. And if it does happen, this could be the reason why gold is perking its head up, because that would really make gold be very, very popular.
Well, you see, you are a fundamentalist.
No, I just like gold.
All right. Well, I appreciate all that you do.
Well, thank you so much. I appreciate it, and may God bless.
Bye-bye.
Okay, we got another call from Colorado. Bobby, are you there?
Yeah, Larry, good morning.
Good morning. What can I do for you?
I was in UNG, and I had a core position of 100 shares at 15.39. I pulled 75 off at 16.85. When you make 10% one day, that's fine. And I left 25 shares on now. How should I play this?
Well, you know what? What I would do is, you took 75% of it off. Just pick a stop that you feel comfortable with, and not even look at it anymore. That's what I would do. Maybe take 20% from the high. It should, if it's really good, it's not going to correct more than 20% from the high.
Yeah, I see resistance at about 17.12.
Sure.
Like crystal ball. But another thing, I want to switch. What do you think about copper in the next month?
Well, the rest of the stock market has, it's beginning to look like it wants to rally into late July and early August. That's what it looks like based on the Bradley model. Copper has held up very well. We've gone down and we've made a a huge Gartley down there at the 786 retracement during this move.
Right.
And we've held over the last 8 or 10 days, we've held that 1320 level, which was the 786 at that move. And so what I'm assuming is that we're going to get a little bit of a bounce here in copper, maybe all the way up to the 1360, to 1370 level. And I think that would be a spot that you might want to, take a look at. But we did hold that level
stocks,
in
what
the.
Do you like? Do you like Southern Copper Corporation, or you like FCX?
I don't really look at the stocks at all, Bobby. I basically do futures. All of my business is futures and Forex. I do look at the stocks occasionally when people request them, and what I would suggest you do is look at both of those stocks, and the one that has the higher bottoms and that has the higher tops, that's the one that I would be looking at. As I recall, FX got hurt really badly, wasn't it? Wasn't
FCX
that the one that
been beat up? Freeport McMahon's been beat up,
Oh, okay. Well, the other ones, and I would look at those. I wouldn't touch Freeport because of the fact that it has been beaten up so badly. So that's primarily what I would do.
You would look at Freeport as making the move.
Well, it's had the biggest the biggest correction.
Yeah.
But is that FXM? Is that what the symbol is on that?
FCX.
Okay, see, we've already rallied 10% here, in a matter. Hold on, let me make sure the data is correct because I haven't looked at this stock yes, we've rallied already 10%. Quite in just a short period of time. So I wouldn't buy it here. If you wanted to buy it, I would wait till it got down to around the $74 per share level in FXM.
No, I'm FCX.
FCX. Nothing like Freeport, a little bit of FCX. Now, what is FCX? Is this Freeport McMoran?
Yes, sir.
I didn't know. See, you already know that I do not do stocks. So when you catch me with these, I have to make sure. Oh, now I even got it in my machine as FCX. So I'm able to see it. Hold on one second, and I will post that, and you'll see that this thing has really gotten badly beaten. And I would, if you're looking for a bounce, you could buy it around. If you could get a move back to about 32.50. Then I would say yes, you could probably take a flyer there. But frankly, this is a much weaker than market stock, and I don't know if that's indicative of what's going to happen to the copper market. But this stock doesn't look like it wants to go higher by any stretch of the imagination to me. It's gone from 49 down to 31 without any help at all, and the amount of we haven't even rallied. We rallied about 8 or 9% off the bottom, and that's not very much.
Yeah. All right, Larry.
I hope that helps.
Have a good day. I'm looking at that corn price, too.
Okay, thanks for calling in, and you have a wonderful weekend, and pray for everything to go okay in Greece.
We need rain in Colorado on our fires. We got a lot of fires here, so we need rain.
Oh, you're up in northern Colorado, correct?
Yeah, so we got the fires just only about 60 miles away from us. It's burned a lot of cabins and a lot of homes.
Yeah, those wildfires are horrible. We have them in Arizona too, and when they start, they just very difficult to control.
Just pray for a lot of rain.
Oh, that's for sure.
All right.
Okay, thank you very much for calling in.
Thank you. Bye-bye.
You bet. Okay, now we've already talked about wheat. We've talked about copper. We've had a little bit of a talk. I'm still on the air, but I just made a very bad boo-boo. I knocked myself out of putting in charts in, so it's going to take me a second to reestablish myself, and then I will be okay. I think I'll be all right here in just a second if I can do two things at once, and then I'll be just fine. I wanted to talk a little bit about the stock market because we've had that big move up on Sunday. We had the big drop down, and then what we're looking at now is the market has gone into a really tight consolidation at this level. And so what I'd like to do is to just give an idea of where I think. And this is my opinion again, folks, of where I think the the stock market's going to go into this weekend and into tomorrow with Friday. We've had a move of 1342 all the way down to 1296. And so far, all we're doing now is we're backing and filling. It looks like we want to make a 61% retracement somewhere around 1324. Either today, tomorrow, the next day. We could even get up to 1332. But these are the numbers that we'll be looking at as we come into Sunday night, because we have actually, taken those numbers and held them up relatively well. And we'll see if it is correct. We have a caller from Concord, Massachusetts. Mark, are you there?
I am, Larry. Good afternoon to you. How are you?
Good. What can I help you with?
Well, you kind of sort of touched upon this. I had a Bradley model question. The question is, you had said earlier that, if I misunderstood you correctly, that you thought that we were going to rally in the stock market. Now, you were just talking about the market now. But isn't really all bets off depending upon really what happens Sunday in Greece?
Oh, absolutely. My best guess, and this is what I said in my newsletter, is the ideal situation. If you want to be a buyer of this market, is to have a really bad thing come out of whatever it is they're going to do over there, and have the market come down hard into the 18th, 19th, 20th, into like Tuesday or Wednesday. Mm-hmm. And that would make a third drive to a bottom. Maybe something really significant. And then it would be much better, at least from a buying point of view. I don't like to buy on strength. Like Sunday night, when the market opened up there, you were frothing at your mouth to want to buy it because there was really no news, and they just gapped it up on baloney, and they're probably going to push it down on baloney or do the exact same thing on Sunday, run it up. Either way, you could probably fade it and make money. But the ideal situation from the Bradley format, Mark, is for the market to come down into that 19th area, because that's the 19th, 20th is the Bradley date, and from then on, it releases a lot of negative pressure, and we really have an upward bias into late July, early August. That would be about a 6-week rally, and we came down 7 or 8 weeks, so we could rally up 6 weeks, and the whole world would look great, and then after that, then the real move starts down.
Oh, okay, great. Okay,
that's
Larry,
my assumption, okay?
Thank you. You have a great day.
Yes, thanks for calling in.
Bye-bye.
We appreciate it, Mark. Okay, now, remember when we talk about the Bradley model, these cycles that we look at have positive or negative energy. That's what they have. We've had negative energy ever since the middle of March, actually, and it started really a lot worse as of, the 1st of May when we talked about the seasonal, sell in May and go away. We're coming down now where these things are going to start to loosen up a little bit. But the ideal situation to be a buyer is if you got a really bad sell-off into that 19th. That's the ideal situation if you can get that. And that's the real thing is if you can do that, you're going to be a whole lot better, and it just will make a lot easier for you to be a buyer at that point if we can do it. We're going to take a little break here, and then we're going to finish it up with Treasury bonds.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks. This is Larry Pesavento for the Futures Hours, TFNN, winding up the show. And I wanted to talk to you a little bit about Treasury bonds here. I'm having some technical difficulties with my little camera, so I'll have to walk you through this. But we have come down 8 days from our high. It'll be 2 weeks tomorrow on the Friday where we had that really bad jobs report when the bonds hit the 152 and change, and we got down to 147. And now what we've got set up is a potential Gartley sell pattern, and that will come in around the 150.16 to the 151.15, and if that happens on Sunday night, that's what I'm going to be looking at to get short the bonds. Now, the TBT will not be open during that time, and so at this point, you're going to have to wait and see how the TBT opens. Now, the 61% retracement on the TBT is going to come in at $15.26 per share. In other words, if it backs off at this level, I would be willing to take another nibble at it. Remember the first one we bought at 1680. We got stopped out of that almost exactly on the low, and it's trading at around 1573 right now. But we want to take another look at it because I think we're in a time frame where this is where interest rates are beginning to go higher. And hopefully this is the, oh gosh, that's a terrible trading word to say, hopefully. let's expect that this is what we think we're going to be. And actually, expectation is not a very good word either, because all of your frustrations in the market come from unfulfilled expectations. So, try not to expect what is going to happen or hope what's going to happen. Just wait and see. My motto is trade what you see, not what you think or believe, and that's really what you want to try to live by. So hopefully is a very bad word for trading, and so is expectation. So the numbers to look at for Sunday night are 150.16 in the September bonds all the way up to 151.15. That's the 618 versus the 786. And the TBT when the market opens would be somewhere around 15.25. Now that's expecting that there's going to be some really bad news, coming out of Greece. It's going to make a run to flight to quality, which I think is not a very good thing as far as buying bonds, but other people perceive that as the case, and I think that perception is wrong. But we will know more when these things go. Now remember, after the Greek elections, we're going to have things coming out of Spain, and then after Spain is going to be Italy. And as Milton Friedman said, way back in 1999 when they brought out the euro, he said if there was ever something that was going to fail, he said it had to be this. He said this is not written worth the paper that it's printed on, because you can't get 22 countries to decide on anything, let alone one country. And that's what we're going through with that right now. So Sunday night is going to be very, very wild. We've already mentioned that Oanda, which is one of the big Swiss, it's actually a very large Swiss firm in Switzerland for Forex, is not going to allow trading for the first 7 hours on Sunday night. That has not happened yet in the U.S. that I'm aware of, and I've checked with several of the larger Forex banks. So it is going to be wild on Sunday night. So, if you've got positions on and you have stops in, remember that these stops can be run pretty quickly. In other words, they can open far above what you're looking at. My advice would be not to have a position until after the effect. It'll give you a chance to get in. Everybody have a wonderful weekend, and I'm sure the world is going to be operating just as well come Monday morning as it will Sunday night. It just might be a little bit wilder, than we anticipate.